Let's talk about inventory. This business has a list of inventory. We've got the beginning inventory, they've got 40 units and they cost $12 to buy. And then we've got some purchases for $13, another purchase for $14, and another purchase for $15. Also during this month, you can see they've made 2 sales. They've made one sale of 65 units and then another sale of 50 units. Inventory costing means we want to find what is the value of the cost of goods sold at the end of the period and what is the value of the ending inventory at the end of the period. The easy way to calculate it, it's just the number of units that are sold times the value of that inventory. But again, we have this problem that some of them cost $12, some cost $13, $14 and $15. Which number should I put here? And the same for ending inventory. The number of units left at the end times the cost per unit. But which one is left? Is it the $12, the $13, the $14, the $15? All the inventory is identical, so we might not know. This is why we have the inventory costing methods, where we make an assumption about how we sell or use that inventory. And the method I'm going to demonstrate now is the moving average method. I'm going to go through the exercise from the textbook on page 115. This is the table that I'm going to work with to answer the question. We've got the date, the transaction, inventory purchased is going to increase the total, inventory sold is going to decrease the total, and then this is our total or our inventory on hand after each transaction. We're going to be using the moving average method, so every time we sell something, we're going to sell it at the average cost. The next transaction on the 10th of September is a sale of 65 units. You can see over here that we have 100 units and that their total cost is $1,260. When I'm using the moving average method, I need to find the average cost. The average cost is the total cost divided by total units. I'll just write it here. Total cost divided by total units. And that's going to give us an average cost of $12.60. 65 times $12.60 gives me a total here of $819. Now I need to work out what's left. I had 100 units. I've sold 65. That leaves me with 35 units. And how much is that worth? 35 times $12.60 means that I've got 441 value for that ending inventory. What's our next transaction? Next transaction is a purchase of 30 units that cost $14 each. So what I've done is I've copied the last balance down and then underneath that I've put my new purchase. I made another purchase of 45 units. So now I'm going to copy all of this balance down here and I'm going to copy my new purchase underneath. I wonder how many units I have now. Let's add them up. I've got 110 and that's my total cost. And then our final transaction in this question is a sale. It says in the question that I've sold 50 units. And now I need to calculate what the average cost is. It's the total cost divided by the total units. Let's work that out. We round it to 2 decimal places and we get $13.96. So 50 times that average, $13.96, is $6.98. How many units are left? 110 minus 50 means that there are 16 left, times $30.96, and that's equal to 838. I wanted to find out what my cost of goods sold was. To calculate my cost of goods sold, we need to add up this amount sold and this amount sold, which is equal to 1517, and that's an expense that will go on the income statement. Also, I want to find the value of the ending inventory, which is an asset. And the ending inventory is this number here.